Hello everyone, welcome to a product review at Phenomenal. In this video, we are going to look at an international fund called Edelweiss US Technology Equity. It's a fund of fund, right? So basically, it's holding another fund which is trading in Europe. No, it's holding that fund, and the expense ratio for this is quite high. It's about 1.5%. So you can basically conclude that hey, this is an active fund, right? So they are holding another active fund, so that's why you get the name fund of funds, right? Now let's compare this fund against a benchmark that is heavily focused on tech. So this focuses on US technology companies, right? I think when it comes to US technology companies, I think one index should just clearly pop up, which is the Nasdaq 100 index, right? So I've created a custom benchmark just to compare this fund against its tech benchmark, right? And you can see paying 1.5% has its own issues, right? So that definitely reflects in the performance, right? So I don't see why you shouldn't why you shouldn't look into the index, right? So this active fund hasn't done much, or hasn't done to the expectation of what an actively managed tech fund should have done. The returns are almost quite similar, right? There's about like a 10% difference, but you can see a massive reduction in fees here, right? Almost three times lower fees here. What I will next focus on is why you should look into these international funds, right? One of the main reasons why you should look into any international fund is for this concept called diversification, right? So when you're investing in any mutual fund that's India focused, you are essentially restricting yourself to one country, right? So if something happens, like markets go crazy, right? So any country can have a very prolonged period of underperformance. So to protect yourself and also protect your wealth against these sorts of political issues or market, country related issues, right? You basically diversify your funds or diversify your money across different countries, right? So in this case, US as being the best performing market, will it's another debate whether it's going to be the best performing going forward. But diversification, thinking about diversification in terms of investing in international funds, plays a key role in any portfolio, and especially when it comes to diversification, any portfolio analysis, right? So we have come to the diversification tab. So at the top, we are kind of ranking this fund, right, out of 100 being the best diversifier. And what does diversification mean here, right? So diversification here means that if Nifty 50 goes down, how protected is this fund? Like, can this also go down? So you have a downside beta of about 0.2, which is on the clearly on the lower side. So that's why you have a very high diversification score for both these funds, right? Like Nasdaq being the highest here. More importantly, how do you measure diversification, right? So diversification here is when you add this fund to an equity portfolio, right? You can see a big increase in the Sharpe ratio. Your return increases also. Your drawdown decreases. Also, this is not like a typical diversifier, right? So again, you're investing in two different equity markets. So you again have equity risk, right? And in the last 20 years, we have also seen that countries like global markets move together, right? So We have seen what happened during COVID, right? All equity markets went down. We've seen what happened during financial crisis in 2007. All the things went down, right? So I'm not talking diversification in terms of capital protection, because during drawdown periods, definitely all these funds are going to go down. But in terms of just diversifying your risk, in terms of not restricting yourself to just one country, right? This is definitely a good option in terms of thinking about international fund, right? And you can definitely see here, right? Like the drawdowns, like during 2022 market sell-off, right? Both these funds actually went down, right? Now going into, see, this is a US tech fund, right? And also shown that, hey, when you compare it to Nasdaq, it hasn't done much for an active fund which is charging 1.5%, which is on the extremely higher end of the expense ratio scale, right? So I have picked one of the lowest Nasdaq funds trading in India, which is the Kotak Nasdaq 100. Again, it's a fund of fund. Actually, it's not a, yeah, it's actually a fund of fund, right? So it's charging about 0.24% compared to 1.5% here, right? So what you can look at is, in terms of total return, there's this big difference. You can also see that in CAGR, the volatility is lower, and when you have a high CAGR and a low volatility, that reflects in a big Sharpe ratio, right? So you can see that in terms of performance, it has done tremendously well. Like a simple benchmark, right? You're not taking an active bet here. A simple Nasdaq benchmark, when you compare it to this active fund, has done well. So what I think that concludes this. We have come to the end of this video, right? What we have learned, what we have discussed in this video is essentially this, US focused tech fund launched by Edelweiss. They're charging about 1.5%, which is on the higher end, the expense ratio. And when someone is charging, or when you're investing in a fund that is charging this high fees, you also expect that to show in performance, right? That is outperforming a simple Nasdaq benchmark, which is heavily focused on tech as well, right? So you can again see here the tech exposure is heavy. So, and it has failed to beat Nasdaq benchmark in a way, in a big margin, right? And definitely from 2021 it has underperformed its benchmark. That ends this video. Before I end this video, what I would like to say is that we have built a suite of tools for portfolio managers, mutual fund distributors, and financial advisors out there. If you are interested in analyzing your clients' portfolios, if you are interested in analyzing your own portfolios, we have built the best portfolio analysis for any type of funds, any type of portfolios, and also we have launched it in a lot of countries. So if you're maintaining a cross-country portfolio, this would also come in handy, because you will get about 300,000 funds across the world in one place. Do check it out. Go to Finominal.com and try out our tools. Thanks a lot for watching. See you next time.